Hi guys, this week has been pretty slow learning to day trade penny stocks on the US market, as last week I committed to not trading day ones unless they're a sympathy play and just waiting for my prime setups like first green day bounces and third day surges where I have time to plan and analyse. But for the first time since learning to day trade, these setups haven't been in play. So I've got mixed feelings about it. Partly it was, this is great, I'm not spending as much time on the screen and I'm protecting my gains. But then what also crept in was impatience and looking for first green day bounce setups that weren't ideal and trying to force a trade. So I took a couple of those and took some losses. So the one first green day bounce setup that was decent, I did take it, but I set the wrong risk. So I got stopped out on it, but I'm going to analyse the trade. So the ticker was CURR. I'll just start off with the daily chart over here first of all. So this one was a slightly larger float than I would normally trade, 40 million on the float, and I'm normally looking at under 10 million. However, this was a multi-day runner, so it started its run on this day. Here roughly, it's gone around from around 36 cents up to highs of 238. So overall, it's had a run of about 560%. So that's a pretty decent run. So that's what got my attention, even though it was a larger float. So for the first green day bounce setup, I'm looking for a stock that's had a big run up, a nice pullback, and then looking to play it for a bounce. And this bit here is a little bit choppy, but because it continued to highs up here, this is where I start looking for a potential bounce. So this is a nice green day here. This is also closed above the day before, so that's also green. This was its first red day because it closed below the day before's close, and then another big red day here, and then this is the day that I was looking to play it for a bounce. So on this red day here, it's had a nice retracement from its highs of around 46%, so that's a decent retracement. And if I go to the intraday chart over here, yeah, so it's having its run up here, and then this is that big red day retracement. So we can see that it's basing around 128. And why that was of interest is because, let me just refresh this. Yeah, if we go back to this day here, which is on the daily chart where it had this big gap up, you can see that pre-market, it kind of had some support there around 126. And it's now, after its retracement, it's finding support there again. So that's a good start, but that's not really enough. But what I did was I went on to the daily chart. If we go back to the historical here, all these lines don't look great. Can see that it's basing out here, 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 all around that same area. So a 125, these two areas, it's got clear support there. And the same again here. Okay, it did dip a little bit further down to around 120. But we can see there's very clear support on the daily chart in that area, which is matching where it's retraced to and where it's got support here as well. So that's looking like a nice potential for a bounce. Not only that, but if I go on to the 1 minute chart, you can see the day before I played it for a bounce after hours, it had a nice little grind up as well, which is kind of hinting that maybe it does want to bounce from this area. So I decided that I would take an entry pre-market the next day. So looking at this area pre-market, it's really liquid and there's not much going on. But I still wanted to get an entry here. So I think I got in, the price, I can't remember exactly what time, but the price that I got in was 134. And I was risking initially off 124 was my initial risk, which even then, it could have been a little bit lower to allow a little bit more wiggle room from where it was basing on the daily chart historically. But I decided 124 was the area that I was going to risk from. And I only decided to, because I could only get in at 134, that was still a bit high for me to risk off 124. So I took really small size. I only put like $13 on that part because I wanted to add to it. However, didn't really give me opportunity to, and because it was a little bit further away from my wrist than I'd like it to be, I didn't feel comfortable to add any more at 134. So I thought, you know what, I'm just going to leave my $13 on there and let's just go with that for now, unless it gives me opportunity. So the market opened and then it comes down, and what I should say as well pre-market is I moved my risk up from 124 to 126 for some reason. It was just scared trading. I didn't want to lose more than I was willing to lose, basically. So I moved it up stupidly to 126, which I knew at the time. I said, you know, that's not the right risk level, but you know what, I'm just going to do it anyway. So I knew what I was doing was wrong, and it cost me because the market opened, it came down and it touched 125. So annoying. And then I was out of the trade. I didn't think enough to continue to watch it and see it reclaim this level. I could have re-entered here. I just stopped looking at it, to be honest. Once I got stopped out, I was like, you know what, forget that. I don't want to look at it. So yeah, if I'd kept my initial risk of 124, even though ideally it would have been set a little bit lower, I would have been perfectly fine. If I just stuck with my initial plan, it would have gone to 125 and I would have still been in the trade. And then I would have caught this decent bounce up to my first profit target and a little bit above, went up to 163. So that's a bounce of about 27% from the day before's low of day. So, you know, that is a nice bounce if you can, you know, cash in. Even 20% is lovely. Ideally, on a bounce, I would be looking for it to be bouncing like 40% minimum, but still, I would have definitely locked in by then. And also because it was a larger float, I probably would have sold in, you know, to these areas. So yeah, bad risk level. Didn't stick to the original plan and missed out on the trade, but again, can learn from it. And yeah, as I said, these setups really haven't been in play this month. So this is literally the only half decent one that I've seen and actually, you know, work and do its thing. But otherwise, they're just not in play at the moment. So I've just got to be patient and hopefully they'll come back into play soon. So going into next week, I'm really going to try and stay disciplined and wait for my A+ setups, even if they don't come into play next week. Being a good trader, it is about having patience, and I really need to try and train myself to have that. But honestly, the mental side of trading is one of the hardest skills that I've come across, and I really hope that I can get better at it. So that's it for this week. Thanks for watching as always, and catch you next Sunday.